Hi, welcome. It's Mary Ellen McGonigal with your weekly Edge show. And this is the show where we prepare you for not only next week, but also beyond. So let's take a look at what we're going to be reviewing today. First up, the current markets. We want to make sure that the markets are healthy before we contemplate putting new money to work. Also, we're going to review some of the underlying dynamics that took place last week that I'm anticipating will continue into next week, and then also what to look out for next week related to that. Before we get into that, let's go ahead and take a quick look at some of the major impactful news last week that drove price action. One of the most impactful was the Federal Reserve. They released their meeting notes from July, and a real panic ensued, actually short-lived albeit, but there was a hint that the Federal Reserve may shift their monetary policy. They've been very generous. It's been an easy monetary policy, and fears that they may tighten policy because of high inflation, high economic growth, and that in turn caused a pullback in the markets midweek. I will tell you that monetary policy is the primary driver historically of the stock market's price movement. From there, we did get jobless claims on Thursday. Weekly jobless claims dropped to a pandemic low. That was good news, but it was tempered earlier in the week by a pretty significant slump in retail sales in July. A lot of this Delta variant fears among consumers, so that also hit the markets earlier in the week. But we did, as you'll see, end the week on a relatively high note. So next week we have durable goods orders due, and then some more personal, not just income, but also consumer spending that will be reported next week. And we could see movement in the markets relative to those particular economic reports. From here, let's go ahead, take a look at those broader markets, see how we ended the week, and give an idea of what we can be on the lookout going forward. So here we are. This is a daily price chart of the S&P 500, and indicated here is that pullback that I talked about earlier in the week. The good news is that the markets barely made it to that 50-day simple moving average before recovering, and we can see that the RSI remained positive. That's constructive. The stochastics are a bit negative, but they appear poised to turn. A lot of times it can be very helpful to use historical precedent when you're looking at the broader markets. We can see we've had fear-based sell-offs on several occasions here over the last several months, and each time the markets have been able to recover. I did talk about this in my midweek MEM Edge report, the concept that I was on the lookout for a nice recovery. We're still just getting a lot of great economic reports and also strong earnings reports as a nice backdrop. So from here, we can take a look at the Nasdaq, and the Nasdaq also pulled back, but a little bit more. It did in fact break below this red 50-day simple moving average, but the good news is that the Nasdaq closed the day above that 50-day. That's very bullish action. And then a continuation rally into Friday that pushed the RSI back into positive territory, with the faster moving momentum indicator stochastics poised to turn positive. So we can see the backdrop for the markets certainly is constructive. Ideally, I'd like to see a move back above these shorter term simple moving average to be even more bullish. But from here, let's go ahead and take a look behind the curtain, share with you some of these 11 sectors in the S&P. This is a 2-month daily price chart. I've gone ahead and added a relative strength indicator, sorted it in descending order, and as always, we want to uncover where that strength is in the markets. This is where you want to be putting your money to work. First up, we can take a look at healthcare. Very nice confirmed uptrend. Hit a new high, pulled back briefly from that. A lot of this is certainly COVID-19 and vaccine related as it relates to the stocks that are rallying the most, but there are also underlying medical products stocks that are providing, whether it's heart valves, automated ability for surgery and so forth that are also continuing to carve out new highs. So healthcare is a very strong area. And then from here, we can take a look at technology. Technology really reversed this pullback and recovered very, very nicely. We can see the outside momentum dynamics in positive territory. XLK, one of the primary drivers here was Microsoft. We can just take a quick look at Microsoft and you'll see that it had a very nice week, gapped up to new highs, nice volume characteristics, momentum indicator black line up through the red. Microsoft looking very constructive here for a pullback as a buying opportunity. So from here, of course, we want to stay away from some of these weaker areas. Not sure if I mentioned, but that move into cyclical stocks, that's going to be basic materials, industrials. It did falter this week. Next up, I'll share with you precisely why and what you're going to want to be on the lookout for a move back into. This is industrials, XLI, that pulled back from that potential breakout. So let's go ahead and take a look at some of the underlying dynamics. From here, I've gone ahead and put in a number of really relevant ETFs. So I have semiconductors, biotechs, software, but first up, we can take a look because again, that RSI in descending, and very quickly, take a look at the dollar. It did rally this week up to near-term highs, and this in turn is going to impact commodity stocks. So that's that basic material deterioration energy as well on that stronger dollar. But also on the plus side is software, IGV. Some of that may be Microsoft, but there are other software stocks, a number of them that are coming in with really good earnings. More importantly, they're guiding higher through the remainder of the year, which is very constructive. Another sub-industry group we can take a look at that's really relevant currently in the markets, and that is the yield on the 10-year. So we can see that interest rates did have that rally about a week and a half ago that impacted a number of areas, but since then has declined. We're seeing a steady, this week not significant, but on the downside as it relates to yields. And one of the most impacted areas is going to be bank stocks. This is KRE, the regional banking ETF, but we can see it's trying to recover. We may see bank stocks come back into play. So from here, I do want to share with you a dynamic that took place as it relates to several companies that reported earnings last week. We do still have a number of well-known companies that are reporting both retail as well as in technology. So based on that, we can keep an eye out for that same dynamic next week because there are some well-known companies due to report next week as well. So let's go ahead and start with Walmart. They came out with their numbers earlier this week, and going into the release of their earnings, Walmart had a very significant rally. They came out with good numbers, but overall the company was up only 1.3% for the week subsequent to that. From here, let's go ahead and take a look at an entirely different dynamic. This is Lowe's, a large home improvement company. And take a look, Lowe's did pull back. Now this move here was because competitor Home Depot came out with poor numbers, so it really pulled back. But the point here is that the company came out with good numbers, and subsequent to that was up almost 10% for the week. So that pullback dynamic relative to Walmart's rally is what I am keying in on. One last name that we can look at, certainly in technology, a bellwether name is Cisco. And we can see that Cisco also pulled back ever so slightly going into their release, and then subsequent, the stock was able to rally. And for the week, it's up 3.2%. So generally speaking, those companies, Macy's up 17%, that pull back going into their earnings are seeing higher results as far as the response to those strong earnings. So from here, let's take a look at a couple of names that are due to report next week. First up is CRM. This is a bellwether software company, well known, and this particular stock has rallied going into their Wednesday release of earnings. So we are going to be not quite as compelled based on last week's action. And then we can very simply compare that to a stock that has been pulling back lately. And if they surprise to the upside, it could be quite rewarding. This is Palo Alto, a software security stock, and it really has fallen out of bed, if you will. They are due to report on Monday, so depending not only on the results, but we are going to want to know that the company is expecting growth into the remainder of this year to be interested. And then also you'll want to marry it with positive dynamics, with that RSI getting up above 50, and we would want to see a positive MACD black line up through the red, very similar to this late May period here where first quarter earnings were released, the stock gapped up and it propelled it into a positive territory. That's it for this week. And for those of you that liked what you saw, go ahead and hit that like button. Any suggestions as to what you'd like to see going forward on a weekly basis, be sure and include that as well. And everyone have a great weekend. I'll see you next Friday.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me